Welcome to The Explainer. Today we're going to connect the dots between three things happening in Australia that seem totally separate, but as you'll see, they tell one single, really powerful story about our economy and where things are likely headed.
So, you've got a massive protest shutting down the Sydney Harbour Bridge. At the exact same time, the housing market is looking like it's about to boom again. And on a global scale, investors are getting ready for something they're calling the big print. Now, on the surface, these things have nothing to do with each other. But the source material we're looking at today suggests there's a powerful thread connecting them all. So let's pull on it and see what unravels.
All right, the real catalyst for this whole conversation was one single event, the biggest protest Australia has seen in a long, long time. But just to be clear, our focus isn't the protest itself. It's the questions it raised about what we're all paying attention to and what we might be missing.
Yeah, an estimated 300,000 people. That's how many marched across the Sydney Harbour Bridge for a pro-Palestine demonstration. It literally shut down the city for hours. Now, whatever your personal stance on the issue is, the sheer scale of this event is what our sources found so incredible.
So this led our sources to ask a really important question. The surprise wasn't just that people were protesting. It's that this particular global issue could get so many people so organized on Australian streets. It made them wonder, what signals are these protesters paying attention to that maybe others aren't? And this slide right here really gets to the core of it. On the one hand, you have this massive public energy focused on a foreign conflict. But on the other hand, the sources we're looking at point to these really urgent problems right here at home. The insane cost of living, the housing crisis, and they feel like these issues are being completely overshadowed.
And that brings us to the second piece of this puzzle, those economic realities here in Australia. So the source material pivots here, shifting the focus away from the protest and onto the Australian housing market, which they see as one of the biggest domestic threats not getting nearly enough airtime.
This chart tells a pretty dramatic story, doesn't it? You see, property prices peaked back in 2021. Then they took a pretty big hit. But here's the crucial part. Look at what's happening now. Prices haven't just recovered. The data suggests there's a lot of momentum building for another major climb.
So, what's driving this potential boom? Well, it really comes down to one thing: inflation. Now that inflation is back inside the Reserve Bank's target zone, pretty much everyone agrees that interest rate cuts are on the way. And we all know what that means, right? Lower rates mean cheaper money to borrow, and that almost always pours fuel on the fire of property prices.
So in a market like this, how do you actually get ahead? Well, our sources laid out this really proactive strategy they call manufacturing equity. This isn't your typical buy and hope plan. No, this is about taking control. You buy one block of land, get council approval to split it into, say, 3 smaller blocks. And just like that, you've created new value, new equity, almost out of thin air, before you've even fully paid for the land.
Now, this whole Australian housing situation, it's not happening in a bubble. Our sources then zoom way out to the global stage, connecting it all to this massive financial event they see coming down the pipeline, an event they call the big print.
So what on earth is the big print? Just think of it like a central bank. Let's say the U.S. Federal Reserve, turning on the money printers and just letting them run full blast. They would slash interest rates and pump trillions of brand new dollars into the system. And the result of that? It's pretty predictable. Asset prices, everything from stocks to real estate to crypto, tend to go absolutely wild.
Okay, so the big question is when? And the sources didn't exactly agree on the timing. One theory is that it could happen as early as late 2025. A new friendlier Fed chair gets appointed in the U.S. and just starts cutting rates right away. The other theory is a bit more dramatic. First, they try cutting rates, but it doesn't work. That failure triggers a big market crash around 2026, which then forces the government's hand to unleash the big print as a final, last-ditch effort.
So, with all this potential chaos and opportunity on the horizon, the natural question is, how do you even begin to prepare for it? Well, the last part of our source material lays out a really practical playbook for how to navigate the, let's call them interesting, years that might be ahead.
And the most important point here isn't even financial. It's psychological. The kinds of assets that would do best from a big print, like crypto-related stocks, are incredibly volatile. I mean, we're talking down 10% one day, up 15% the next. According to our sources, Just getting your head ready for that emotional roller coaster is the single most important thing you can do.
To handle that volatility, our sources gave 3 simple but really powerful rules. First, if in doubt, zoom out. Stop looking at the scary day-to-day price swings and focus on the long-term picture. Second, get your position size right. A good rule of thumb is if you're nervous and can't sleep, you've probably invested too much. And finally, have real conviction. You need to truly understand why you're invested so you don't get shaken out when things get choppy.
And that brings us right back to where we started. From a protest on a bridge to the housing market to the global economy, the single thread connecting it all, according to our sources, is this question of focus. In a world that is just full of noise and distraction, the biggest challenge isn't just navigating the markets, it's figuring out which signals actually matter for you and your future.